Ever found yourself overwhelmed by the task of bank statement analysis? Well, take a deep breath. It doesn't have to be as daunting as it seems. Imagine the process as a puzzle, where every piece fits, bringing you closer to the bigger picture. Your first step is to gather 12 to 24 months of bank statements. These should be the most recent and consecutive, and can be either business or personal. But remember, they should never be commingled. Look for stable and increasing trends of deposits and keep an eye out for any anomalies that could indicate fraud. Lenders usually only allow 3 non-sufficient funds within a year, so bear that in mind. Now turn your attention to large deposits. If a deposit exceeds 50% of the total monthly gross deposit average, a letter of explanation explaining and sourcing may be required. Next up is the expense factor. For businesses, this typically stands at 50%. A third-party prepared expense statement from a tax preparer or a certified public accountant can be handy here. Let's dive into some common guideline requirements. The borrower profile often includes self-employed individuals with 25% or more ownership who have been in the same line of business for at least 2 years and have 1099 income. Matrix requirements usually include a FICO score of 660 or more, the need for reserves, and a maximum debt-to-income ratio of 50%. Loan terms commonly include a 30-year fixed rate and prepayment on investment properties. Testing requirements such as compliance testing are also crucial. These are subject to TILA-RESPA integrated disclosure rules unless they're for business purpose. Most are non-qualified mortgages, although some third-party review firms are seeing qualified mortgages loans. However, remember, not all deposits are considered to qualify. Transfers between accounts, unusually large deposits, proceeds from a loan, cash deposits, refunded expenses, and tax refunds are usually excluded. Phew! That's a lot to take in, isn't it? But remember, the key is to break it down into manageable steps. Look for stable and increasing trends of deposits, keep an eye out for large deposits, consider the expense factor, adhere to common guideline requirements, and remember your testing requirements. By following these best practices and keeping an eye out for red flags, your bank statement analysis can be a breeze. So the next time you're faced with a stack of bank statements, don't fret. You've got this.